Hello everyone, welcome to Daxiong Talks about US stocks. Today is August 26. On Tuesday, the market traded calmly during the session, with all three major indexes rebounding, although large-cap tech stocks generally fell. Nvidia's gains offset declines in communication services and other sectors. From the trading perspective, key market participants remain in a wait-and-see mode. The escalating conflict between Trump and the Federal Reserve, along with growing concerns over the Fed's independence, is putting pressure on both the stock market and the US dollar after the market closed yesterday. Trump signed a document to dismiss Federal Reserve Governor Cook, effective immediately. Cook, however, stated that she would not resign, and her lawyer pledged to take all necessary legal action to stop the president's unlawful move. This dispute could trigger a prolonged legal battle, potentially reaching the Supreme Court. In fact, Cook's so-called financial fraud appears to be nothing more than minor errors, such as reporting to primary residences. Compared to Trump's own history of serious charges, that is negligible. Trump's blatant attempt to turn the Federal Reserve into a White House subordinate has once again introduced fresh risks to financial markets. If the Fed's independence is compromised, markets may lose confidence in its ability to control inflation, which could disrupt financial stability. That said, today's market reaction was relatively mild, as investors largely chose to wait and see how events unfold. Even with questions over the Fed's credibility, shorting U.S. assets is not an easy bet. At present, markets have not fully priced in the risk that Trump could target other Fed officials. Currently, the market has already priced in a rising probability of a Fed rate cut in September, with the likelihood of further cuts later this year. In the short term, earnings reports are having a greater impact than policy events on the short-term fluctuations of large-cap tech stocks' earnings remain the dominant driver. On the tariff front, trade negotiations between India and the U.S. ultimately collapsed. The U.S. plans to impose a 50% tariff on Indian goods starting Wednesday, citing punishment for India's purchases of Russian oil. During negotiations, India drew a red line, rejecting U.S. demands for broader access to its agricultural markets. Prime Minister Modi pledged that even at a high political cost, the interests of Indian farmers would not be compromised. Under U.S. pressure, Indian refiners plan to reduce purchases of Russian crude in the coming weeks, though India has no intention of cutting ties with Russia. Recently, Modi held talks with Putin and is scheduled to visit China at the end of this month to improve bilateral relations. At the same time, Indian exporters are preparing to weather the impact, with the government pledging financial support and encouraging them to expand into Chinese, Latin American, and Middle Eastern markets. On the U.S.-China trade front, China's Vice Minister of Commerce Li Chenggang will visit the U.S. to meet with American trade officials and negotiators, signaling progress in the talks. From a technical perspective, the Nasdaq remains capped by its 10-day moving average on the 100-day K line. Although Wall Street's major banks are broadly optimistic about Nvidia's earnings report, the index has chosen to keep the suspense until the very end. Nvidia's results could either lift recently weakened large-cap tech stocks or accelerate their pullback. The direction will become clearer after tomorrow's market close. Dallas Fed President Logan noted that money markets could face short-term pressure at next month's quarter end. He reminded markets that September's tax deadline and quarter end are typical periods of tight liquidity, as corporate tax payments and fund transfers drive up short-term funding demand, potentially pushing up short-term rates and raising financing costs. This would put pressure on highly leveraged trades, growth stocks, and rate-sensitive equities. A similar situation occurred in June this year, when overnight funding rates spiked and U.S. stocks experienced heightened short-term volatility. However, Logan reassured markets that even if short-term liquidity tightens, the Fed has tools to prevent it from spiraling out of control. This gives investors mental preparation without triggering immediate panic. Currently, bank reserve balances stand at $3.3 trillion, above the minimum adequate level of $2.7 trillion. leaving the Fed room to continue its balance sheet reduction. The overall trend of tightening liquidity remains unchanged, even if a rate cut comes in September, if it is gradual rather than a rapid series of cuts. U.S. equities are unlikely to surge as they did in 2020 on a wave of liquidity. Future market performance will depend more on earnings fundamentals. From an operational standpoint, investors should guard against flash crash-style corrections caused by liquidity strains before the end of September. Yet, with the Fed providing a backstop, any correction in U.S. stocks may be sharp but short-lived, creating potential by the dip opportunities, particularly in high-quality tech and growth stocks. Goldman Sachs has warned that the current market rally may be nearing its end. As U.S. economic growth slows, market volatility is expected to increase. With the VIX index likely to rebound in September, investors should be mindful of short-term swings, though mid to long-term opportunities remain intact. Bitcoin staged an intraday rebound today after briefly dipping below $109,000, triggering liquidations for nearly 180,000 traders, with losses totaling as much as $813 million. Trump's dismissal of Fed Governor Cook has deepened concerns over central bank independence, prompting traders to avoid risk. Bitcoin ETFs saw net outflows of about $1.2 billion in August, while spot Ethereum ETFs attracted $2.7 billion in net inflows, reflecting strong institutional participation. So far, spot Ethereum ETFs have recorded total inflows exceeding $12.4 billion, with total net assets reaching $30.5 billion, representing 5.2% of Ethereum's market capitalization. Ethereum's strong performance has fueled expectations for further gains. However, historical data suggests Ethereum faces correction risks in September. Still, today's market structure and investor base differ from the past, meaning short-term volatility is likely, but the medium to long-term outlook remains positive. Late in the session, Uniteal Thun shares plunged sharply. According to market reports, the company warned that an ongoing investigation could extend beyond its Medicare Advantage operations to include commercial insurance, private clients, and healthcare network management. This development introduces potential legal and financial risks. The late session plunge in UN shares was a typical market reaction to uncertainty, with investors concerned about possible fines or operational risks. In the short term, capital may flow into safe havens, driving the stock lower due to fear and uncertainty. Over the medium to long term, however, the stock's trajectory will depend mainly on the investigation's outcome and the scale of potential fines. If no major losses materialize and core operations remain solid, the stock could recover after consolidating. Strategically, investors should remain cautious in the short term, while mid to long-term investors can look for buying opportunities on dips. Meanwhile, with a September rate cut increasingly anticipated, the financial and credit sectors may see renewed inflows of capital. Lower rates would reduce borrowing costs, directly stimulating corporate and consumer demand for loans. The U.S. version of Huawei Affirm is set to release its earnings report this Thursday after market close. The stock is up 28% year-to-date. While 2023 was a strong rebound year, performance in 2024 and 2025 has been more tied to overall market sentiment, stable, but not explosive. Over 98% of Affirm's revenue comes from the U.S., meaning it is unaffected by tariffs and faces little overseas policy uncertainty. Next month, its major competitor, Swedish fintech company Klarna, is expected to pursue a U.S. IPO, with a projected valuation of $13–14 billion, far below its 2021 peak of $50 billion. This reflects fading enthusiasm for the buy now, pay later BPL model and greater investor caution. In the short term, Klarna's IPO may benefit Affirm by drawing attention to the sector. But in the longer term, it poses a headwind due to heightened competition and a decline in scarcity premium. Ahead of earnings, I believe Affirm is suitable for small position holdings, but investors should closely watch for potential fund outflows once Klarna goes public. Another BPL company, Sezzle, has delivered stellar performance over the past 2 years at one point soaring 40x in 2023 and tripling again earlier this year. However, its stock recently plunged 34% in a single day due to weaker than expected guidance. Such sharp swings are not unusual, and the stock remains in consolidation. Compared with a firm, Sezzle is more small and specialized. Its target audience skews younger and lower to middle-income consumers. With a focus on fast fashion retail and small daily purchases, repayment cycles are shorter, resembling Klarna and Afterpay. Its positioning is closer to a payment tool with smaller risk exposure and greater flexibility, making it more attractive to capital markets. Speculative money has fueled explosive rallies in its stock price. In a rate-cutting environment, Sezzle is suitable for small position swing trading. Upstart, an AI-driven lending platform with strong technological capabilities and a broad customer base, while it experienced rapid growth in recent years. Revenue growth slowed in 2023 to 2024 and profitability has been unstable. Its high valuation is vulnerable during market turbulence. After earnings, the stock plunged but stabilized around its 200-day moving average. JP Morgan recently upgraded the stock, citing a stable consumer credit environment, supportive rate cut expectations, and improving business volume and profitability. Short-term pullbacks can be viewed as buying opportunities. SoFi, this year, its stock has outperformed UPST. Beyond lending, it has expanded into crypto, equities, cross-border payments, and private equity funds. Its tech-driven premium is notable. Earlier this year, SoFi launched a private market fund that allows retail investors to access pre-IPO giants such as SpaceX and OpenAI. It is suitable for long-term holding and buying on dips. LC's stock price has fallen from $146 in 2014 to the current $16.5, close to its IPO price of $15. However, Q2 earnings this year were solid. Net income reached $38 million, up 156% year-over-year, with EPS at $0.33. Its valuation is cheaper than SoFi, but the market still views LC as merely an online lending company. With limited growth stories, its valuation and stock performance continue to lag behind SoFi, founded in 2016 by Israeli entrepreneurs. It leverages AI for loan asset securitization (ABS) and operates under a B2B model, bearing no credit risk itself. Its revenue model relies on commission fees. The stock is up 270% year-to-date. OPFI partners with community banks to bypass interest rate caps, offering high-interest loans 500 primarily to borrowers with poor credit, while the model has faced criticism. The stock at one point doubled this year and is still up 44% year-to-date. Due to its small market cap, inflows of capital can easily drive sharp rallies, a typical small-cap effect. ERCT, the largest mortgage lender in the U.S., up nearly 78% year-to-date. Rate cuts benefit housing and credit markets. But with limited free float and concentrated ownership, institutions are less willing to chase the stock. As a result, its performance lags behind competitor Coop. Since going public in 2018, it has posted gains nearly every year. The stock has already doubled this year, with a market cap of just $12.3 billion, making it worth watching on pullbacks. Eli Lilly rose nearly 6% today, leading the S&P 100. Its oral weight loss drug succeeded in Phase 3 trials and is expected to apply for approval in 2025. This is positive for Lilly but a setback for competitor Novo Nordisk, whose stock slipped 1.8%. From a trading perspective, Lilly is worth considering for positioning, while Novo Nordisk is best left on the sidelines in the short term. SATS surged nearly 70% today after reports that AT&T will acquire part of its wireless spectrum licenses for about $23 billion in cash to expand its fiber network and cooperation. The good news is already priced in, so chasing at this point is not recommended. Alright, that's it for today's sharing. Bye for now, see you tomorrow.